from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Caroline Hyde, in for Emily Chang. This is Bloomberg Technology. Coming up in the next hour, the DeFi titanium token washout spurred billionaire crypto investor Mark Cuban to call for stablecoin regulation. But Kraken's Jesse Powell says a nanny state not necessary here, thank you. He'll join me in just a few minutes. Plus, meme stocks like AMC, GameStop, and Del Taco now continue to make their mark. We'll discuss how online influencers are offering financial services in this meme-driven market. And under pressure, power systems in Texas and California once again getting hit amid the heat waves. Is keeping the thermostat at 78 degrees all summer the new green normal? Those stories in a moment. But first, stocks tumble, yield curve flattens. We've got it all in terms of markets perspective. Kriti Gupta, take us through it.
Well, Caroline, a broad sell-off today, risk off everywhere. People really getting their money out of stocks. And where did they put it? They put it in the bond market. So you saw yields drop 6 basis points here on the 10-year. But in stocks, it was a bloodbath, whether it was tech, whether it was financials, red on the screen, semiconductors caking it extra hard. Let's zoom out, though. Let's zoom out to the last 5 days and see what was happening, because the red on the screen was a today story. Look at this week. The NASDAQ 100 is actually up on the day, whereas the S&P 500, the broad index, down 1.9% on the week. So you really see that tech outperformance story. Very crucial this week. Tech is coming back. Let's broaden it one more time. Look at this on a 2-year time frame, because, of course, this is coming after not just a monster rise in the last year, but also some stagnating behavior. You start to see that really happen. And of course, you see those tech moves continue. Let's see if the outperformance can continue. So that's the macro story. Ed, what's the micro story?
Yeah, I'm looking in the chip sector, and Nvidia at one point up 4% on Friday, but fell away with the rest of the market. You can see closing down just a touch, 1/10 of 1%. A new street high from Bank of America, $900 a share, calling it the one-stop shop for AI processing. And Caroline and I talked about this earlier. One stock's pain is another stock's gain, because at the same time, Intel had its price target cut by Jefferies to $54 a share, basically saying the competition is coming for Intel, and Nvidia is one of the main leaders of the pack. Elsewhere, PayPal. We don't talk about PayPal much these days in this sort of pantheon of tech shares, but up considerably, highest level since February, up almost 1.9%. It's told its vendors it's going to raise prices on the platform, which Wall Street clearly welcomed. And lastly, honorary mention for Tesla, rising for a third consecutive day, still down more than 10% year to date, though. Let's look at cryptocurrencies. Broadly, cryptocurrencies lower on Friday. The main one, of course, we're looking at is it Bitcoin below 36,000. We can see we spilled into the next session, so we're slightly higher. And the Bloomberg Galaxy Crypto Index down more than 6% on Friday, falling for a fourth consecutive day. Now its lowest level in 6 weeks. Caroline, put to one side the gyrations and volatility of day to day. Let's look at the crypto market from a different perspective. Private capital, venture capital, because so far in 2021, $17.4 billion piled into crypto startups from venture capital. That's in the first 6 months of the year, right? Exceeding the record that we set back in 2018, which was $7.4 billion. I know you've got some fantastic guests, but let's put away the public markets and bring it back to the private markets and ask, what is the future of crypto companies? Caroline.
Especially when the likes of Andreessen has got even more money that they've been raising than expected and yet to put it to work, I think. Bloomberg's Ed Ludlow, we thank you. Now stick with crypto, because billionaire investor Mark Cuban got hit by a DeFi, that's decentralized finance, kind of rug pull after trading a token that crashed to zero. Now, the DeFi titanium token is part of get this, algorithmic stablecoin project. We'll dig into what on earth that means in a moment, but it's called Iron Finance. Suffice to say, stablecoin's pretty hot these days, but after the 100% washout, which is pretty rare, Cuban called for more oversight. In a statement, he said, quote, there should be regulation to define what a stablecoin is, what collateralization is acceptable. Should we require $1 in US currency for every dollar, or define acceptable collateralization options like the US Treasuries? That was in a tweet in response to our own Joe Weisenthal. In response to that, Kraken CEO Jesse Powell took notice and took on to Twitter to tell Cuban, not doing your own research and YOLOing into a terrible investment because your time is worth more than your money is your problem. It's called gambling. Regulators are still trying to understand Bitcoin 10 plus years on. If you need a nanny state to hold your hand, you're NGMI. that meaning not going to make it. Jesse joins me now, along with What You Missed colleague, of course, Joe Weisenthal, who, it was all your tweets, it was your conversation with Mark Cuban that sparked this.
Cause trouble.
Yeah, Joe, first and foremost, before we get in with Jesse, what's an algorithmic stablecoin?
So there's stable coins that are backed by dollars in the bank, there's stable coins that are backed by crypto, and then the holy grail is, can you just have a coin that sort of floats, or maybe partially backed, or somehow there's incentive to keep the peg at $1. So far, it's proven to be pretty tough because it's hard to dictate to the market what a coin should be worth.
And Jesse, I mean, you saw this conversation happening on Twitter, and you feel that, look, regulation isn't the answer. Why not?
Yeah, look, I don't think we need regulators to protect billionaires from gambling their money. You know, Mark Cuban admits that he invested in this thing with doing zero research. This contract that powers this stable coin was not audited. And, I think it's just another case like so many others of people just throwing money into something brand new without doing any research on it, without understanding the fundamentals, without looking at the code, and just hoping that it's going to go up like everything else. And to call for regulation because you made a bad bet, fully knowing what you were getting into, fully knowing that you did not do any research yourself, I think is just going too far. And regulators are having a hard enough time understanding Bitcoin. To get them to understand this bleeding edge DeFi stuff, I think it's just asking too much, and it has the potential to really slow down the industry and slow down a lot of innovation. And I don't think that's what we need at this point. I think we just need more people doing their research, especially billionaires that are going to be making statements publicly, encouraging other people to get into these things. I think that's irresponsible. I think when you have that kind of an audience, you really need to be careful about what you say and not mislead people into thinking that these are all winners.
So which is it? I mean, here it is, 2021, a billionaire trading some really far out DeFi exchange. Is that cool? Like, wow, that's happening in 2021? Or is it sort of like, wow, this is sort of like what happens at the top where a billionaire is tweeting about regulating a stable coin on like some Ethereum sidechain? Like, is that a sign of the beginning or is it a sign of the end?
I think it's a sign of the beginning. I think it's still very early days for crypto. I think a lot of this DeFi stuff is just getting figured out. I think, over the next decade, DeFi is going to replace a lot of the existing financial services infrastructure. It's going to replace a lot of the unnecessary middlemen and necessary trust layers when you have just algorithms, formulas, math, sort of doing the job of millions of people and fully transparently, fully auditable. And I think it's going to be a new paradigm for financial services where the consumer has direct access to the market versus having to go through many layers of middlemen.
But
so,
aren't middlemen just kind of, isn't regulation kind of inevitable if, yes, I understand that, of course, Mark Cuban's come forward and said, look, I didn't do my due diligence and I admit that and I lost some money and I was stupid. But if we are going to see retail hurt by this, if people do get a pile on because they follow what these people say, doesn't that inevitably mean that regulators are going to have their heads around it in some way, shape or form, Jesse?
Regulators are already deeply involved with the space and have been for a long time. So I don't think there's a lack of regulation right now. I think there's a significant amount of oversight already. I think it's when you ask the regulator to get into the details and block people from participating in the market where they might be fully qualified and fully understanding of it. There's no way you can stop people from investing in things, even in equities, without doing any research. And there are tons of bad bets to make in the stock market as well. The government's selling lottery tickets. So there are a lot of bad bets out there, but I think people need to have the ability to invest when they have done the research, to make that bet and to not be blocked by the government from making a good investment, which has been the case historically with these investor accreditation rules. And crypto is one of the very few things that a retail investor can get in early on and still see the kinds of gains that venture capitalists have seen.
Jesse, Kraken is a centralized exchange. And of course, there's the rise of these decentralized exchanges. Do you think about that when you think about the future of Kraken, the competitive landscape? Is that a threat to you? Is there a future part of your roadmap where you can make your own exchange potentially more decentralized? Like, how do you think about the emergence of these markets from a sort of business perspective?
Sure. It's still very early. Long term, we do see decentralized finance as something that we want to integrate more with and give consumers more exposure to directly. So we see ourselves sort of building a portal or an interface layer for people to engage with these things in an easy to understand way, where they don't really need to understand all the guts of what's happening behind the scenes, but they get the benefits of the underlying protocols through an interface that they're familiar with. So long term, it is somewhat competitive, but I think it'll be more of an integration play where they're able to use those services through a platform like Kraken that comes with customer service and banking rails and all of the things that you would expect from a traditional financial services provider.
So the one other thing that's going on lately, obviously, is that we've seen this decline in the price and volumes of crypto across a lot of different exchanges. And, obviously there's theoretical use cases for a lot of this stuff, but a lot of the reason why people get excited about crypto is simply they're excited about the number on the screen going up very fast in a short period of time. How do you break out of that cycle? Like, how do you get people to be excited about the ecosystem more broadly rather than just the excitement of making money very fast?
Yeah, I think it's hard in the developed world where we have access to great payment rails, great banking system. But there's still a lot of users of cryptocurrency who basically don't have an alternative. They're using cryptocurrency because their national currency has failed because of hyperinflation, or because they're not able to get access to the traditional banking system because they don't have documentation of their identity or things like that, or even children don't have a way to store value online. So it's solving a lot of pain for a lot of people in the world. I think as an adult in the United States, it's not so obvious, but Bitcoin and cryptocurrency broadly, do have use cases beyond speculation. But I think it's just part of the process. The early adopters are going to be speculators to some extent, and I think they provide the liquidity to the market, and that provides stability of the price over time. And I think as that happens, it becomes more useful as a transactional currency.
Right.
Always great to get your take. Hey, who knew? Even Stephen Cohen's getting in on the act of, he likes the blockchain, maybe not the crypto yet. Kraken's Jesse Powell, really great to have some time. Joe, you started it all with your interview with, of course, Mark Cuban, getting him on the Twitter sphere. We thank you and all that debate. Joe Weisenthal, have a great weekend, both of you. Meanwhile, coming up, 156, that's the number of years it's been since the US ended slavery. And the country has come a long way since, but maybe not as far and as fast as many would want. How one venture fund is looking to diversify its investments. That's next. This is Bloomberg. Diversifying venture capital. That's the aim of many, including HBCU VC, with the launch of its Venture Capital Lab Fund. Now, the fund is aimed at kind of allocating, directing how capital flows, how it's distributed to increase opportunities for Black, Indigenous, and Latinx entrepreneurs. Joining me now is Hadia Majid. She is HBCU founder and CEO. And Hadia, you formed before this, you co-founded the nonprofit Black Founders, supporting the entrepreneurs to really build their businesses. Now you're looking at trying to allocate capital towards them as well and use that capital efficiently. What was wrong? What did you see that was needed still to set up this particular fund?
Absolutely. So previously when we started Black Founders, one of the things that we quickly realized that as much as we prepared and trained founders who were coming from underrepresented communities, is that there was still this barrier, and that's access to capital. And so one of the things that we looked at with HBCU VC is how do we break these barriers? And one of the ways that we're doing that is by creating investors who are coming from the communities where are currently underrepresented in VC funding. And so we launched HBCU VC roughly 4 years ago with a focus on training the next best-in-class investors who are coming from these underrepresented communities.
Talk to us through some of these barriers that every day are being experienced by the founders that you see, and indeed by why capital isn't being allocated efficiently towards them.
Yeah, so I think it's pretty well documented and researched that in the earliest stages of funding for a company, often that company doesn't have a track record. They're in their earliest stages. And so the investor, when they make that decision to fund, are really backing that person, the belief in that person, the potential of that person. And this relies on people's individual bias on, is this a person that I can believe that can take this to a company that's going to have the $1 million, multi-million dollar, $1 billion outcome? And often that's based on the patterns that we currently see. If I've never seen a Black woman take a company public before or have a multi-million-dollar exit, then it is very difficult for me to believe it.
Yeah, Hadia, the perspective of if you can't see it, you can't be it. I was earlier speaking to Ursula Burns, of course, the only Black female of a Fortune 500 company. And of course, she's been writing a memoir, thinking a lot about how you allocate more efficiently, how you have diversity at a board level. What we've seen a lot of is, well, white women getting more diversity on boards, more females, but the people of color element hasn't been tackled nearly so efficiently. And there is an element that we're seeing more female-led businesses getting money because there's more female VCs. Is there a need for more Black VCs as well to be able to ensure that you can see it in that respect, and the people who are allocating the money are doing it efficiently too?
Absolutely. Last year we saw, I think $2.6 billion, the Crunchbase report went to Black and Latinx-led companies. And so unfortunately, if you think about this, roughly $131 billion was invested through venture capital last year. So this is pretty much chump change. So it's not fair to look at a community with you're only given chump change to and expect the same type of outcomes, financial outcomes, and growth with such a small amount of investment.
Tell us about your story, Hadia, because I mean, you've got 20 years of experience, software engineer over at Lockheed Martin. What drew you to the industry? What drew you to want to shake it up too?
Yeah, so, I'm a daughter of immigrants. So one of the things that I saw in my family was entrepreneurship. And I don't think we named it entrepreneurship, but it was a thing that was happening. My grandmother came here from Jamaica, and she worked many businesses just out of necessity and took care of myself, took care of my family, even took care of, extended family members. And so I saw at a young age the power of entrepreneurship in building wealth and community wealth. When I moved to the Silicon Valley area roughly 12 years ago, I saw this entrepreneurship, but I saw it on a greater scale and then made a connection that high growth entrepreneurship was building the next generation of wealth and it was sustaining the innovation economy currently. And so, one of the things that I was looking at is why weren't we here? Why weren't Black and brown people represented here in terms of building these high growth companies? And the reason was it was access to capital.
Hadia, there is so much talking, and now we're hopefully seeing walking too. But we're seeing, philanthropic giving in a big way. Looking at where your $1 million Teaching Venture Capital Fund coming from, the Mark Cuban Foundation, the John D. and Catherine T. MacArthur Foundation, a lot of foundations. But do you feel optimistic that now is the time of real change, of actual money being put to work, and people realizing that this makes really good business sense?
Yeah, absolutely. So this is a good start. This is a good spark. But in order to grow our companies to the levels where we want it to, so that they're equitable in terms of the high growth companies we see today, it needs to be a huge village champion this work. And so while we're seeing philanthropy support at the earliest stages, we're hoping that the industry continues to add on and sustain this effort to support a company through its continuous stages, through Series A and beyond, all the way to IPO.
We are here to shine a light on it. Keep on championing. Thank you so much. Hadia Mujahid, great to have some time with you, HBCU VC founder and CEO. What a career thus far. Meanwhile, coming up, from smartphones to smartwatches, everyday habits are becoming ever more intelligent. But what about shopping? Next, how one brand is using Google's AI technology to enhance the customer experience. We're going luxury. This is Bloomberg. So the pandemic accelerated the switch to online shopping for everyone, but also luxury brands really got in on the game. Google Cloud and French luxury brand owner LVMH are now teaming up to deliver a much smarter shopping experience to customers. Joining me in today's Retail Transformed discussion is Carrie Tharp, Google Cloud VP of Retail and Consumer. And talk to us about the tie-up with LVMH. What are you doing for their brands?
Yeah, we're very excited about this partnership. It's strategic in the sense that we're focused on accelerating innovation at LVMH, so an organization that has long been focused on transforming luxury. But now how do they bring AI and machine learning solutions to help empower their maisons or their individual brands to create new customer experiences, whether that's digitally or in store, reshape and deepen those relationships, and even drive operational improvement.
So can you describe it for me, Carrie? If I'm going out and buying, which sadly I wouldn't, a Louis Vuitton handbag, for example, what would the experience be like for me?
Well, that's the interesting part of this partnership. The sky's the limit. So it's setting the data foundation required for AI and ML-based innovation. And so each brand can understand their customer at a deeper level. So this may mean when you go in store, an associate having a deeper understanding of everything you've interacted with them historically in the brand and digitally, and really curating an assortment that's specific to you. It can reshape their communications to you, understanding what types of products resonate with you, what fits your style. And so really just understanding you as a person, and each brand will take that and create something that's unique. So I wouldn't expect the personalization at Fendi to look the same as Givenchy, Dior, and even Sephora. But they'll now have the capability to do rapid test and learn and see what's right for their customers and what really drives long-term growth and what's consistent from a luxury perspective. So this is all about personalization, privacy, but engaging the consumer in a new way. And then also in the pandemic, as they saw, having to switch from in-store, which luxury is known for, that touch and feel in store, the presentation ceremony, and really closing the gap between digital experiences and what the consumer is used to doing in store historically. So there's going to be a lot of interesting things across all of the different houses.
Carrie, how you think, and we're looking at a chart right now that really shows how much online shopping has rocketed and how much it's likely to stay. We've only got a minute left, but is it going to be sustainable? Are we still going to shop online as much as we have in the pandemic?
I say absolutely. The data we're seeing is consumers are now comfortable to return to store, but 50% of them saying they now anticipate to stay both shopping online and in store together. That is more than double the historical average that retailers saw, where they were lucky if 10, 15% of their customers shop both channels. So in this world, we've been talking for years that these channels are being broken down and that you need to keep the customer where they are, and we're expecting this to stay.
Carrie Tharp. Great insight. We thank you, Google Cloud VP, Retail and Consumer. An optimistic note there. Coming up, influencers, known for their large social following, of course, are offering financial services in the era of meme stocks. And maybe a little bit of advice we'll discuss. There's Bloomberg. This is Bloomberg Technology. I'm Caroline Hyde, in for Emily Chang. Let's get back to financial markets, where Bloomberg's Ed Ludlow is keeping an eye on those meme stocks, Ed.
It's a mixed picture for meme stocks on Friday, right? Some up, some down. These are some of sort of the Reddit forum favorites. They're the most mentioned on StockTwits, the social media platform. You see UTime up by almost 4%. AMC, who had been up throughout Friday's session, ending up down 2.5%. Ocugen. Come with me into my Bloomberg terminal, though, and look at this chart. This might be a B-Tech first. Welcome to the Meme Mania Index. For all the jokes, all of the working out whether something is or is not stonks, look at this year-to-date performance. This is the basket of 50 restricted Robinhood stocks, right? The ones that Robinhood had to restrict in January on that heightened volatility. The white line is the S&P 500, a modest year-to-date gain of 11%. That is outperformance, clear as day. And to drive that home, look at the 3 or 4 stocks at the top of the tree, right? Let's bring up AMC. Let's bring up GameStop. Still year-to-date gains in the thousands of percent. And those more recent phenomena, Del Taco, a modest 11%. It's very hard to make sense of, but those are the numbers. Caroline.
Some great numbers. A first. We always love a first. Meanwhile, Ed Ludlow, we thank you. And want to talk more about, well, the stonks, as we call them. Influencers, of course, have gotten on the action. They've become quite popular over the last year, building a large fan following. First, they took over the world of fashion and dance. Now, of course, offering some of them financial advice to help people get rich quick, apparently. Some of them talking about meme stocks and the surge and generating questions on, well, how to build wealth. Joining us now is Bloomberg's Donald Moore, who has been following the influencer leaders, been offering this financial services since, well, January, when this stonk discussion really hit all of our perspective, when we're talking AMC, even, the latest fast food outlet getting in on the action, Donald. But you look on TikTok, and every other TikTok I get is one person telling me that I could write my own children's book on some website and then sell it on Amazon and make hundreds of thousands. But there is actually very serious financial advice within it as well, other than just side hustles.
Definitely. And I think the biggest reason why it's taken off so much on social media is the fact that, in general, like young people in America, they don't really get education about financial information in terms of investing or how to create wealth. Most of what we learn in schools is the idea of, how to balance a checkbook or like how to pay taxes, stuff like that.
Did you even get that? Wow, we didn't get that in the UK.
Yeah, it's actually, so according to some stats, only 7 states have any required financial literacy courses at all. So even people who get that are ahead of the curve. So you see increasingly young aspiring investors, they turn to social media just because they trust it. These are people who grew up with Twitter as their main news source or YouTube as their main source of video. And as they just trust people on those platforms to give them information, whether or not it might be entirely trustworthy or not. So
yeah, talk to us about who you've seen who's legitimate, who's doing a good service in terms of social media and getting the word out there of how to play wisely with your money.
So we, in my story, we covered a couple of people who give out financial information. So one of them is it's a Discord platform. Discord is like a messaging platform. There's a group there called Asset Entities, and it's just a huge collective of people who trade financial advice. And so we have a larger community where it's free information. And then for people who are more serious, who want to delve more into it, who want to get like kind of more hands-on, one-on-one advice from people, they actually have like a subscription tier where they have monthly fees like from like $35 to around $50, where it's almost like you're getting a personal financial advisor, just like you would if you were like paying for like Charles Schwab or something of that nature. And they tell you how to.
Sorry. What's so interesting as well is, of course, all of this has been allowed and many people are very passionate about this because this is the moment where you can have real financial inclusion. You don't have to earn a certain amount. You don't have to be a registered investor. You can actually buy into crypto without having to have some sort of set of hurdles you have to jump through. And indeed, you can now buy stocks out much more easily through apps such as Robinhood. Is there a real empowerment? Is there a force for good here, Donald, or is there more regulation needed, do you think?
It's kind of a mixed bag. So it definitely has empowered people, just the idea of being able to buy fractional shares. So you can just buy a little piece, or even just Bitcoin. You can buy a fraction of a Bitcoin. So you don't need to have tens of thousands of dollars to invest. It's definitely empowering people. In fact, that's one of the main draws. If you go on Reddit, a lot of them kind of relish in the fact that they are able to like kind of take over stocks from like the hedgers or the shorters. And what you see is a lot of people are pretty much putting all of their eggs in one basket. They're taking all of, like, pretty much their life savings and investing it. And again, like, they trust people on social media, on Reddit, on Discord to kind of show them the way, but these aren't actual financial advisors. They like play a role, they might be knowledgeable, but they don't adhere to the same kind of rules and regulations. So people might end up, getting hosed in the end by putting all their money in stocks or coins that are worthless a day after. So I definitely think that it would help to have more regulation just to protect people. At the end of the day, these are kids, like young adults, investing significant amounts of money, and I feel like they need more protection as well.
Donald Moore, I hope to speak to you much more on all of this. It's such an amazing area and a great story. I urge people to go and read it, what's going on in terms of the influences, the power that they're having in terms of your money being put to work. Meanwhile, if keeping up with the latest meme stock isn't dizzying enough, well, the New York mayoral race, well, that might stump you. A new way of voting awaits those casting ballots in the city's primary on Tuesday. Bloomberg's Charlie Pellet explains.
Democrats voting in New York's mayoral primary will choose their favorite candidate as usual. But in this ranked choice election, they'll be allowed to put as many as 5 names on their ballot in order of preference. With 13 candidates running, voters will face complex decisions and a set of intricate rules. A candidate with more than 50% of the first-place votes wins outright. If no one hits that mark, the candidate with the fewest first-place votes is eliminated. Every ballot cast for that candidate is tabulated, and the second-place votes are distributed among the field. The process repeats until just 2 contenders remain, and the one with the most votes wins. Ranked choice voting is new to New York, but not to the U.S. It was first used in a local election in Ohio in 1915. San Francisco, Minneapolis, and Santa Fe are among the cities that currently employ it in municipal elections. 5 states used ranked choice in 2020 presidential primaries or caucuses. And in 2020, Maine became the first state to adopt the system for a presidential general election. While ranked choice voting eliminates the need for runoffs, it will take time to tabulate the votes. Election officials say the winner may not be known for weeks, but with registered Democrats outnumbering Republicans by a huge margin in New York, it's likely that whoever prevails in this primary will become the city's next mayor.
Coming up, traffic jams could be a thing in the past as more companies move into flying taxi space. We'll speak with the CEO of one of them, aiming to help commuters beat the traffic blues. And with Amazon's biggest sales event of the year about to kick off, Telsey Advisory Group expects total sales for Prime Day to be between $11 and $12 billion. That's a 6 to 16% growth compared to last year. The firm has an outperform rating on the stock and a cool $4,000 price target. There's Bloomberg. So apparently flying taxis are no longer the stuff of science fiction. Companies behind the technology are getting a lot of attention from investors wanting to pour capital into the industry. One company, Lilium, is set to go public on the Nasdaq via a reverse merger. Of course, it's doing a SPAC, Quell Acquisition Group. And of course, that particular special acquisition company was started by former GM North America President Barry Engel. My colleague, Matt Miller, Francine Lacroix, spoke earlier with Lilium co-founder and CEO Daniel Weigand, who has his sights set on, apparently, Newark to JFK airport shuttle.
What we do is that we're developing an all-electric vertical takeoff and landing jet. It's a 7-seat aircraft, and we're operating these aircraft in an intercity shuttle service that provides high-speed connectivity between cities, and this enables us to achieve hours of time savings for our customers. The New York JFK route is probably one of those which I'm getting asked about by everyone who has been in New York, and we can save a lot of time on this route. But where we are also excited about is flying a bit longer trips, like 60 to 150 miles, where we can achieve hours of time saving and a high-speed connectivity without the need to build new rail tracks or roads on the ground. And this is a huge opportunity to provide high-speed connectivity for hundreds of cities and millions of people around the globe.
But hang on, so we were just looking at, it looked like maybe guys playing video games, but I'm guessing that means these are going to be drones. So they won't be flown by a pilot in the vehicle, and they will be electrically operated. Is that right?
Yes, it's all electric. However, it's going to be flown with a pilot on board. It fits into the existing aviation regulation framework. So you're going to have a pilot on board and an aircraft that is certified against the same safety standards like a commercial airliner. So the big difference and the unique advantage is that it's all electric. It's a fully sustainable new transportation system. It can take off and land vertically from a helicopter pad or a similar platform. So you need very little space and you can access into the urban areas with an airplane. And the last big advantage of our unique jet technology is that it's a closed engine, and these make lower noise emissions than propeller aircraft. And thus we can basically be market leading on the key enabler of this sector, which is low noise emissions combined with vertical takeoff and landing capabilities.
Yeah, so how far away are we from actually, or are you from, first of all, getting it certified, and then, building the infrastructure around it, but actually make it commercially viable?
So we're now about 3 years away from the certification. Lilium is a 6 years old company. We've had about 5 years in technology development, where you've also seen the footage of the test aircraft just a couple of minutes ago. And we've learned a ton of things in testing these airplanes. We actually have a very strong partner, Ferrovial, who is also an investor in Lilium, and they are building multiple landing sites at first in Florida, where we're going to launch our service. And they are also operating this infrastructure. We are very much taking an ecosystem approach to actually launch the service.
So what's your biggest concern? Is it, you know, getting it certified that it's green, or actually safety?
Safety is your number one priority, always in aerospace. For that reason, we have hired an extremely experienced and strong aerospace leadership team, a team that has built and certified some of the biggest and most complex airliners. Besides the safety aspect, which is paramount in aerospace, I'm an engineer at heart, so I'm totally focused on getting the product right and getting the service right to have the best experience for our customers.
Lilium co-founder and CEO there, Daniel Weingand. From technological advances in the sky to innovation around, well, agriculture. Electric vehicles aren't just being used for recreational use. EVs are finding a firm footing in farms. Bloomberg's Carl Stock has more on electric tractors.
A crop of electric tractors is slowly sprouting in America, replacing diesel-burning rigs with the same kind of plug-in disruption that we're seeing on the highway. This is the Monarch tractor, a 5,000-pound machine that recently hit the market and quickly got traction with the vineyards near its California factory. Not only is the Monarch silent, but it's sentient. Outfitted with an array of cameras and LiDAR technology, the Monarch can drive itself and help farmers monitor crops from afar. More importantly, it lets ag empires prepare for increasingly high hurdles on diesel emissions, while marketing a cleaner, greener crop. There are a handful of similar startups right now, including Selectrac and Z-Tractor, though only Monarch has drawn investment from CNH Industrial. That's a tractor giant on par with John Deere. The challenge with these rigs isn't that different from that of electric sedans. Range, or in this case, hours. Batteries are finally powerful enough for farm work, but whether they can handle a 15-hour harvest is another question. Monarch's hoping to solve this quandary with redundancy, selling 2 batteries for each machine, which can be swapped out at midday. The other hurdle's price. At $58,000, the Monarch is roughly twice the cost of a diesel equivalent. The calculus is that man-hours saved, less required maintenance, and perhaps a longer life cycle will convince farmers to pay the premium, at least until the battery economics improve. And while it may be a while before electric motors make sense for massive combines and other giant industrial machines, the startups aren't concerned. Smaller utility tractors are by far the largest part of the market and the fastest growing segment as well. At the end of the day, the tractor market moves almost in lockstep with crop prices. And as rates for corn and soybeans and wheat finally tick up for the first time in years, farmers will be feeling flush. In short, we can expect to see a lot more Monarchs in the heartland. This is how we move. I'm Kyle Stock. For more stories like this, follow us on your favorite platforms.
Some beautiful vines there. Now, coming up, power supplies come under strain as the mercury rises across much of the Southwest. We'll find more on the threats of blackouts. That's next. And Micron was one of the worst performers on the S&P 500 on Friday, down more than 4%. Link's equity strategy dropped its price target from $110 to $100, citing softness in end demand and supply chain disruptions. Other memory-related chip makers, Seagate, Western Digital, also lower. From New York, this is Bloomberg. Much of the United States and Southwest is bracing for more hot weather, and with it, warnings of potential power outages. In Texas, the situation has been amplified with the shutdown of 4 power plants. In California, the power crunch comes as officials struggle to address growing threats, not only from high temperatures, but also drought, wildfires again. For more, we're joined by Rebecca Miller, Wood Mackenzie Research Manager. And just for all of those happy East Coasters like myself, sat in New York, you in Boston, who are perhaps not aware of the plight that's going on, set the scene of what's happening right here, right now, if you're living in California.
Absolutely. So particularly in both Texas and California, we're looking at a pretty extreme heat wave. So Texas demand forecast to be more than 2 gigawatts above where we would typically expect for this time of June. California also experiencing drought on top of these very extreme temperature conditions. So both ERCOT and CAISO.
ERCOT being, CAISO being?
Yeah, so these are the entities that sort of oversee grid reliability in these regions. And so both of these entities, ERCOT and CAISO, ERCOT for Texas, CAISO for California, have issued alerts indicating to the public that they need to start reducing consumption of electricity in order to maintain system reliability.
So basically having to turn down your air conditioning unit when you really want it, turn off your television when you want to be tuning into Bloomberg Technology. So what are the long-term fixes here? I feel like we reported heavily on it last year. The wildfires were a real situation. Are we getting marginal supply? Is renewables coming to the rescue? Because we hear more and more about, of course, the infrastructure spend that is wanted to be directed that sort of way.
Absolutely. So, looking back to Texas in particular earlier this week, we did see very consistent production from the solar fleet in particular. So last June, for example, we were typically expecting around 3 gigs of solar at the peak. So that's 3 gigawatts, pretty significant at the utility scale. However, this summer, we're actually going into June and July with more than 6 gigawatts of solar production around the peak. So really nearly double compared to levels last year. And that was very critical this year, and this June in particular, when we start to see very strong temperatures around the same time that we would expect to see solar production peaking. Okay. So that's played an important role, particularly in Texas, with keeping the lights on, really. We did start to see reserve levels dip, particularly on Monday. As you mentioned, we started to experience some tight conditions in terms of electricity supply. We had a couple larger thermal units offline, a very large gas unit, as well as a nuclear unit offline, representing nearly 3 gigawatts of capacity that we really needed. So solar did sort of help alleviate that stress.
Solar alleviated. What about the longer term? And so we've got solar coming in now. What do you think? I mean, the fact that Texas has built a grid that was so self-sustaining and therefore open to issues, of course, that we ran up against previously. How are we seeing longer-term fixes? Because, of course, this isn't just exceptional issues that happen in the summer, but also exceptional issues that happen in the winter too.
Absolutely. So my team focuses predominantly on the short term, but we have already seen ERCOT and CAISO as well starting to adapt their strategies, particularly around assessing adequacy of resource capacity season over season. So there is some variability to what we can expect from wind production or solar production, whether it's winter or summer. There are different weather conditions that can play a role in either encouraging or depressing wind production or solar production. So we are starting to see more active planning around that specifically. We also will start to see a pretty extreme build out of both solar and storage capacity, particularly in ERCOT over the next 2 to 5 years. West Texas and the southern portions of the state will start to see pretty extreme increases in both the installed storage and solar in the region.
But realistically, how much can renewables fill the gap here? At the end of the day, the efficiency, the power output of older, more climate-damaging forms of electricity are so much more efficient. At what point, is it just a case of you just going to have an awful lot of them, and each solar farm and each wind farm will only produce a little bit, but it'll be enough if you keep on scaling it? At what point do you think we'll get to the efficiency levels that you really need to be able to shut down the nat gas and the coal that's already been pushed off to a certain extent?
Yeah, I think that's probably a little ways off, and I'm probably not the best person to comment on that, being more short-term focused. But certainly we'll need to see sort of massive build out on the renewables front to really put a dent in some of that capacity coming offline. But worth noting, in other regions, MISO, for example, just to the east, which is the mid-continent ISO, so the Midwest equivalent of ERCOT, we do see some additional expansion of thermal capacity there.
Rebecca Miller, Wood Mackenzie Research Manager, really shining a light on what, is an incredibly hot summer once again, and how we managed to fend off such situations. We're thinking of you out there in Cali and Texas. Keep cool this weekend. Meanwhile, got some interesting breaking news coming from Airbnb. If you're a user, such as myself, Airbnb increasing its flexibility on cancellation policies. We understand that to permit booking cancellations for free 30 days prior. That's really interesting, of course, amid what have been some of the issues around the pandemic, people wanting to be able to cancel more at short notice. So it seems as though they're changing some of their terms and conditions, increasing the flexibility in cancellation policies. Now, that does it for this edition of Bloomberg Technology. Of course, make sure you tune in Monday, when we'll be joined by Todd McKinnon, his Okta CEO. We'll discuss Amazon Prime Day with Melissa Burdick, of course, from PackView. Up next, Wall Street Week with my colleague David Weston. Enjoy and happy Juneteenth.